this year. Busola, thank you for joining us today.
Thank you for having
Pleasure
me.
to have you on the show.
Thank you.
Well, we talked about the consumer goods index all year, and we've seen many of the companies struggle, and that was quite evident in their results right from first quarter up until the latest results that we've gotten, right from the breweries to some the key sectors, the fast-moving consumer goods. And I'm just wondering, what would you say has been the biggest challenges for these companies this year?
Okay, so first off, when you look at the consumer goods space, you have the breweries, the flour millers, and the conglomerates, and so on. Talking about the breweries, you have the major players, that's NB, Guinness, and then international breweries. These companies have quite faced some challenges in the couple of years, and in this year most especially. So you have consumer spending that is still quite pressured. Slow economic growth, and the consumer goods sector is one sector in which largely mirrors the macroeconomic environment, right? And so you have consumer spending still pressured. These companies are not making as much sales as they used to, and then that impacts their top line. And then again, for the brewers, you know that last year the government started an excise duty regime where excise duties will now be increased from 30 naira per liter, and also by 2019-20, it's a 3-year regime, so you have 30 naira per liter, and then it moves to 35 naira in 2020 and in 2021. And so these companies have had to deal with this cost, and they cannot pass it down. They've not been able to pass it down to the consumers due to the competitive nature of the year.
But what we're hearing, because I remember speaking to a consumer expert not too long ago, and he said that look, very soon that it's now inevitable for these companies, brewers, to pass on these costs.
Initially they tried to lobby with the federal government to see if they could have a rethink, or maybe this excise duties could be aborted, but I don't think they've been able to gain traction as regards that. So in November, you saw NB, we saw Guinness, come out to say that okay, that we might have to increase the prices of their goods at different price points, right? So you'd see maybe they want to increase that their brands or foremost brands that they think that okay, they could afford to have these prices increase. So it's not going to be all on all the brands, so it's going to be at different price points. And then you also saw Guinness to say that okay, they would want to increase their price at this point. For Guinness, their export sales dropped in this last quarter. They used to produce a Malta Guinness for their sister company in Ghana, but that has stopped because they have started producing locally. So you would see that their export sales dropped, and then their top line dropped, significantly. So at this time where there are much pressures and headwinds in the industry, you would expect that they would take that step to want to increase prices. And then International Bureau was also like, if other companies will be increasing prices, then they might have to toe that line as well. But I mean, from past experience, I mean, when the excise duty first came into regime, we saw that even when NB and Guinness increased their prices, International Brewery didn't toe that line, which made them revert back to this price. But we are hoping that maybe that would eventually materialize now that the pressures are more.
And I'm assuming that we should expect this trend to continue for the sector as a whole, not just for the brewers. But quickly for the brewers, what does this mean for competition going forward? The premium versus the value end of the market. What does this mean for, are there going to be any winners? Or since everybody, so I suppose, is going to go with the price increase?
Okay, I would say that, for a brand like Guinness, which they are known for their premiumization and all of that, and they also have the Spirit brand, which helps them cushion this effect slightly. I would say that at the value end, where you would find International Brewery and NB, because their lager segments and all of that, I expect to see increased competition in that space, and saying that consumer prices pressure, people are going towards the value end of the segment. So of course you would still see intense competition in that.
But will innovation be key? Because I know that is something they've relied on in the past when the sector had a few issues a couple of years past. I know that they relied heavily on innovation, and I'm just wondering, have they stretched to that? Is there still room for that?
Yes, there is. You would see NBC, they've tried to, make their distribution channels and networks, better to have, easy accessibility to their products and all of that. And then same as Guinness, I think innovation is going to play a very, very, key part in this. Number one, to help them enhance their business operations. So if there are bottlenecks or challenges or places where you think they could have done this better in order to drive sales, I think that would help. Also, route to market, you have to make sure that, okay, your products are getting to the end users, effectively. So for Guinness now, they just launched a new brand, Guinness Gold, and then, there has been concerns about people not being able to get this off the shelf, and then they've said, okay, that they're going to try to, so I expect innovation to play a very, very vital role in this company's business operations.
Okay, now going forward into 2020, for investors who are looking, those who are still interested in, obviously there's still some very good value stocks, especially since we've seen that erosion on many, not just in the sector, across the market, and with what's going on at the money market, we're seeing more money and more cash coming into the equities market. So for those who are interested in the consumer goods sector, what are those stocks or what are those names that maybe still pose a good re-entry point for those interested?
Okay, so you would say that sequel to CBN's directive that more auctions be restricted to just deposit money banks and foreign investors, we saw some form of rotation into the equities markets, which was quite expected because, I mean, look at the fixed income spills, yields are pressured, and even at primary market auctions, you see that the rates are quite low. So investors are looking for where to put their money, alternative assets, and, there was a rotation into the equities market. And then we saw that the banking index actually rose, as in grew at that point. I think gained about 15% at that point. So we expect that going forward, this will also trickle down to the other sectors as well. So I mean, now last week we saw that it was only the consumer goods sector that gained about 1.17% year last week out of all the other indices. So we see that investors, okay, they've played in the banking space. You would expect that they will go to other sectors. So you see telecommunications, the consumer goods sector as well.
Or would they be more strategic because of it? Yes, we're seeing the whole rising tide lifting all ships, but I'm thinking that there may be some cherry picking, as it were, amongst the...
Of course, there would always be. I mean, you wouldn't expect an erratic flow into the equities market. So you look for stocks that are fundamentally strong, and then they have good dividend pay yield. So that's another very important aspect of it. So I mean, if you want to come, you'd also want to come for something that would give you higher yield. So stocks that companies that would declare good dividends, and you have good yields on them, and also you have opportunity for price appreciation as well. So yeah.
Busola, thank you so much for talking to us today.
Thank you for joining.
Appreciate your time on the show. Busola Akinyele, investment research analyst at Meristem.